Hello everyone, welcome to Just Invest Today, and today we're talking about a potential market crash. Can this market crash actually happen in October? The Treasury Secretary said this, that there could be a potential market crash, debt crisis going on right now, but no one's really talking about it, which is very interesting. So first we're going to get into this one because we saw what the market did yesterday. It had a huge red wave, blood red. Everyone was selling their stocks. The S&P went down like what, 2-3%. The Dow 700 points down, whatever was happening. And this is all because of the China Evergrande and the debt liabilities they hold. They hold like 300 billion in debt, which is incredible. The Chinese government said they're not going to bail them out. They want these companies to suffer for what they've been doing to the whole real estate market. So they've been promising all these clients, all these people, all these expensive homes. They haven't been providing it. They've been just taking on debt, rolling over that debt again and again, trying to pay off creditors, and liabilities are going to become due Thursday. So you see the potential for a huge crash because different countries have actually their hands in this real estate market. So that's a one huge potential for a crash. So get that crash on top of another one. Look what Yellen just said. And this is, no one's talking about this, which is very interesting. Yellen urges Congress to raise debt limit, warns Pelosi about the extraordinary measures running out soon. How is no one talking about this in the market right now? The Treasury Secretary said this. It's not some random person. Like, they're saying raise the debt limit or we're screwed. And this is all on the backs of Joe Biden's infrastructure plan that wants to raise $3.5 trillion, right? So that's why they're trying to raise taxes. That's why they're trying to find ways to actually fund these plans. But they're running out of time because their debt limit is going crazy. And to bounce on top of that, look, this has been, they have 8.5 trillion. This is the highest. The Fed's balance sheet hit another record high this week, $8.4 trillion. So this is what the Fed's balance sheet been doing. Just look what this is just 2020. It went from below 5 trillion all the way to 8.4 trillion. And this spending is continuing. This is not stopping here. They have to continue the spending or the market is just going to crash, and that's not what they want. Especially under Biden, they do not want to crash. It will just kill his presidency even after the whole Afghanistan issue. So they're trying to do anything possible to stop the potential for a market crash because that's going to kill it. Because we already know Trump was on the opposite side saying, look what I've been doing so much for the market and the economy has been going crazy. So if Joe Biden does the opposite, it's going to look bad. So Yellen wants to make sure everything goes smooth. So she's trying to raise the debt limit to just an extraordinary amount so this doesn't happen, so they can actually use this limit to actually secure their funding. So let's read some of this, guys, and let's get into it because this is serious. And this is what you need to do. You need to prepare for this. Your portfolio in your stocks right now, just check them. Just see, are they able to ride the tide? Like, are they going to be stronger going forward 5-10 years? You don't have to worry about any debt, any bond payments, any like just short-term liabilities, like anything. So make sure you have everything going right in your account. Guys, can you please like this video, subscribe to my channel? You know I'm always going to be providing you with good, strong content. So let's get into this article really quickly, man. Treasury Secretary Janet Yellen Wednesday warned House Speaker Nancy Pelosi that a mere specter of a U.S. default can have drastic consequences for the U.S. financial market and urged Democratic leadership to raise or suspend the debt ceiling as soon as possible. Can you imagine someone actually saying that? Suspend the debt ceiling. We don't care about the money you have or how much we are spending as an economy. We're just going to be able to pay it off in the future. So just increase it as much as possible so other people aren't worried. Just look at what they're doing. Yellen reiterated that the lawmakers have until some point in October, this is it, October, before the department exhausts its extended efforts to prevent what would be the historic default. Historic default. Is she saying this can be worse than 2008? Like, that's what she's basically saying in this. If USA defaults on its debt, do you know what that's going to do? That's going to be at least a 1 to 2 year crash. Like, minimum. Like, if the government is gonna default on its debt to all the debt holders that have the debt in the U.S. market, and they're not even able to pay off other people. So just look at the consequences. Reiterated Yellen. A delay that calls in question the federal government's ability to meet all of its obligations would likely cause irreparable damage to the U.S. economy and the global financial markets, said Yellen, later dated Wednesday. We have learned from the past debt limit impasses that waiting until the last minute to suspend or increase the debt limit can cause serious harm to business and consumer confidence. Hell yeah, like imagine the US just defaulted on its debt. That's like the peak of a crisis. That's like the peak of a crisis. So make sure, because they're saying this in October, that they need to do this by October. So what happens if they don't do this? You don't know what's gonna happen in the market. So that's what I'm trying to say. Prepare for everything, because even your real estate, what if they increase interest rates on real estate? You see what inflation's doing. You see all these factors that are coming into play right now. So they might raise short-term borrowing costs, taxpayers, negatively impact the credit rating for the United States. Imagine United States having a worse credit rating, just going down in the dumps, like going back to some Zimbabwe thing and just just crashing. Most economists say that U.S. default could spark a severe economic downturn and send borrowing costs soaring across the American economy. Despite dire consequences, lawmakers have made little progress. Man, this is brewing. This is in your eyes, front and center. You cannot say these articles aren't out there. So I just want to warn people that the potential for a market crash is just, don't think it's not there. And just prepare accordingly. Have your investments set out. I'm not saying sell your investments. I'm not saying doing anything crazy with your account. Just make sure if you were doing everything properly, you had strong companies, like just examples like Amazon and Apple. Even if there was a debt crisis, your stocks drop by 50%, you know they're gonna make it out, because people are still gonna buy phones. People are still gonna use e-commerce. So you wouldn't even need to worry, man. You're gonna still, shop here, shop there. You're still gonna walk around with your iPhone, whatever, listening to music, doing all that good stuff. So you wouldn't even need to worry about that. So make sure you have your stocks in order, your companies in order, because the crash could happen at any damn time. So the ceiling prevents the Treasury from issuing new bonds to fund government activities once a certain debt limit or date is reached. And this is the number one thing. We understand how inflated the market is because of what the Fed is doing. The Fed is putting so much money in the market by buying all these mortgage-backed security stuff, all these bonds, these real estate, these stock investments. They're buying everything. They don't even care. They're just buying a basket of stuff. So if they have this debt obligation that they can't adhere to, that all bond buying and all that inflated market is going to shoot down so severely. It's going to be crazy, man. It's going to be a mayhem. So, guys, I want you to prepare accordingly. You don't have to take what this article says. You can just ignore it. No one can predict the market crash. So just take this with a grain of salt, but understand that you have strong companies. That's the main thing I want you guys to get from this video. Have strong companies in your portfolio. Don't have a lot of debt. Have solid balance sheets. You know they're going to be stronger 5 to 10 years out, and you don't have to worry about any of this. So, and make sure you maybe have some money on the side, man. You might be able to buy a few companies here and there. Get that 60% return easily. So, man, tell me what you think about this article. Do you like it? Do you believe in this? Do you think there's a debt crisis? No, yes, who knows, man? So, like this video, subscribe to my channel, and I'll get back to you in the next video. Peace.